In this video, guys, we're going to look at the psychology behind adverse trade moves. Stay tuned. Hey traders, warm welcome to you. So this is one really for people who are trading stocks, okay? And you have bought a stock or you've shorted a stock and you wake up and all of a sudden it's gapped against you. It's gapped up if you're short, it's gapped down if you're long. And the psychological battle that goes on in your mind and how we automatically default to the worst case scenario, why we do that and what we can do to resolve that. So imagine yourself in this position now. You long a stock, the stock is chugging along nicely. Next day you wake up, some bad news has come out and the stock has gapped down. You're now in a loss and you're now in a loss you didn't really want. And you're sitting with it thinking, what do I do? Now, it may then trend down the rest of the day and you think, oh, this is not looking great. Now, the automatic reaction as a human is that we associate this potential bad event with even more catastrophic event. So we might say, oh, you know what, this losing trade or this gap down now, and you start thinking of all the companies that have gapped down on some catalyst and are now bankrupt, or they've gone down 70%, or they've gone down 80% or something. And you start thinking like this guy here, which is the normal way of thinking, which actually, you know, in the caveman times probably protected us. We start thinking, back to the time when we were perhaps in a trade that went completely against us and hammered us, or back to the time when there's a headline when a company gapped down in this. We start to think the worst case scenario. And like I say, if we look at back in the caveman times, it probably served us quite right. You know, a guy would go out and hunt for food, he'd be mauled by a tiger. Our next guy goes out, hunts for food, he doesn't come back. We start to think, oh, he's been mauled by a tiger, and it makes us cautious about all just piling out the cave and getting battered by a tiger. You get the point. And so this is a protective mechanism we put in place as humans to stop us repeating the same thing. We always think of the worst case scenario, and it's survival instinct, right? Same as we don't want to lose all our money, so we go into survival mode. So, you know what, we're gapping down. This was the same thing that happened when that happened last time, and we think of the worst thing. It's to stop us, you know, all avoiding like lemmings going into the same thing. But of course, from an investing perspective, what we need to do, or from a trading perspective, we need to objectively assess. And so we move into this position, this guy here, who's much calmer. He says, okay, I'm down on the deal. That can't be changed, right? I'm down on it. I've lost money. I need to objectively look at what's happened, and I need to look at everything that's happened before to make a decision. So I look at the facts. I start thinking of the facts. Okay, this is what they've said. This is what's happened. This is where the price has gone. What's happened with previous companies that have done that? Okay, well, actually, you know, most of them, it's not a big deal. It gaps this way, and then afterwards it might settle down. It might go back up. I don't need to be rash about it. So I'll come out if we go down another 10%, say, whatever the number is, and if we don't, then I'll ride it. And so that's far more clinical and far more objective than this guy who panics. Because listen, we've probably all been there, right? And I'm not from a short-term trading perspective as well. You're plugging along, market hammers down, you've not stopped out for whatever reason, or you haven't got to stop in or something. You're there thinking this thing's going to die, and perhaps you're buying into lows here, and it keeps going and going, and you start thinking, oh man, what if it collapses? Remember the flash crash? The flash crash went down 1,000 points. Oh my gosh, I can't take 1,000 points. I'm at £25 a point for spread bet. I've got 10 futures contracts, whatever. And that's the thing that goes in your mind when you forget that actually 1,000 occurrences of this little downdraft exhaustion, you know, 999 of them either stabilized or popped up a little bit or didn't flash crash. And so rather than you thinking of the one major event that happened and panicking out of the lows and dumping it and thinking, oh my God, I'm going to lose all my money, it's a clarity of thought of saying, okay, look at the facts. We're down heavily, this and that, the other. Where do I need to put my stop? Where do I need to objectively trade this? I could still be wrong, but I want to make the decision. If I'm wrong, I want to crystallize the loss based on facts and objectivity as opposed to emotion, which this guy is doing because he's basing that falling share price, that falling market, whatever the adverse moves, a gap, and he's marking that, or he's linking that with some of these unusual extreme events that occurred. So next time you're in a trade, whether that's intraday trade that keeps going against you, it's going higher and higher and higher, or you're shorting into it, or if you're in a stock trade or investment or something's gapped against you, rather than panicking about it and thinking, oh, worst case scenario, I need to do something, objectively set time aside. Put your stop in at a position so you know that's your worst case scenario, and then objectively assess and go, you know what, do I still want this deal? And accept that actually your default is this guy here, and really you need to coax yourself slowly into the fact base. And that can be hard, especially if you're intraday trading and it's going against you, and more ticks, it kind of downdrafts another 10 you're long, there's another $100 gone, another $1,000 gone, whatever it is. That can be painful. And if you need to just stop the rot, then by all means do that. But try to get into a position where you're reacting objectively and you're not overreacting when a trade goes against us, because that's the default setting that we all have as human beings. Anyway guys, hope that helps if you're in a trade that adversely goes against you and you're not expecting it. Stay tuned for the next one. Bye bye.